Hi everybody, for today's 2-minute takeaway, I want to take a brief look at a balance sheet and what it is. Why is it useful? I often field questions from clients about, for example, how much super do they owe? And they genuinely don't know where they can find that information in something like Xero or another accounting software. I'm Hilary O'Dwyer, founder of Titian Consulting, your virtual CFO. So lots of businesses, small and large, predominantly focus on their trading results, what their revenue is, what their costs are, and the resultant profitability. And while these are key metrics and tell an important story, your P&L isn't the only story available to you in your accounting software. The balance sheet gives you a snapshot of all your assets and liabilities on a certain date. So let's have a look at assets first of all. So assets show you everything that you own and are entitled to. First cab off the rank is cash. This is all the cash in your bank. And if you're running your books properly, your bank balance in Xero, for example, is going to be more accurate than your physical bank balance because you may have already scheduled some payments to go out at a future date. Next one we would be receivables. Who owes you what? You'll be able to schedule due dates for these amounts, so you're going to have a clear line of sight on when cash is going to translate from receivables into your bank balance, which is really important to know. Then you could have other things like fixed assets, which could be computer equipment, office equipment, cars and vehicles, and property. These things all have different levels of liquidity. Cash is immediate, debtors more so, and then assets can be sold to become liquid. So it's always useful to be able to look at your assets and go, well, if I had to translate everything to cash now, what would I be likely to get? On the other side of your balance sheet and offsetting these assets are your liabilities. Everything that you owe to other people or institutions. Now, obviously, the biggest institution that we think of is the ATO, PAYG, GST, and income tax. Another crucial one is superannuation, which is due quarterly, but a lot of companies would try and pay that monthly. And then payables. These are bills that you need to pay to people. Finally, you might have some finance leases, which is how you are funding the purchase of your assets. The difference between these assets and liabilities are essentially your profit. So hopefully your assets are bigger than your liabilities and you're making some money. So it's easy to look after the P&L and make sure that everything is going to the right place, but is your balance sheet being looked after, or are things going there to die, which can often be the case. So things are just put into the balance sheet and forgotten about and no one ever knows. So it really is worth having a little look at it and doing a bit of a tidy up, and having accurate balances at your fingertips on your dashboard telling you what you owe or what you are owed is absolutely go.